Hey everybody, Economic Ninja here. I hope you're doing great. Got a big story for you. This is out of Target. Target just released some information and things do not look good, and we're gonna dive right into it. So here we go. I'm gonna link this story below. We're gonna go over it a little bit, then we're gonna talk about it. It's entitled Target Profit Plunges 90% as Inflation-Wary Shoppers Pull Back. It says Target reported profit plunged 90% in the second quarter, falling far short of expectations as inflation-wary customers pulled back on spending non-essential items. Guys, we have been talking about this. I have been preparing for you for this, and these are the times that you should be excited, but you should also be very, very wary of what's gonna happen in the stock market, right? Because it's not just Target, all right? There are a lot of companies that are severely hurting. Remember, I told you we were gonna start seeing it in the second quarter, but what you're about to see in the third quarter, when third quarter releases come out in the fall, are going to absolutely blow your mind. And I've said specifically, it's because people are going to care more about food and gas and electricity, and they're not going to care about big screen TVs and a bunch of crap that you don't need that came from China. Thank heavens, because we need less reliance on China and more manufacturing in this country. That's why I started that group, the side hustle group. I want to see people start companies and start businesses now. And even when you say, hey, is this a good time? It actually is. It's a great time to start a side hustle, but you've got to do it the right way. Sorry, I digress, but it's so true. This stuff is happening. And the thing is, these big box retailers, you know that they have a way of counting every penny and nickel and squeezing, blood out of a turnip, literally, when it comes to a balance sheet. And so if they can find margin, they're going to find profit margin. And right now they're not. So this is it's actually quite horrific if you think about it. All right, here we go. Retailers, including Target, have been forced to cut prices on general merchandise, such as clothing, electronics, and home goods because of excess inventory of goods. Consumers had to shift more of their spending to higher priced food and gasoline. Man, the Ninja should read these things ahead of time, but you see literally I didn't read this. Guys, this article came in from a subscriber, an amazing subscriber, now a friend of mine. His name's Andrew, and he has followed us all around the country. We've got to know him very well. He's definitely part of Ninja Nation, and I'm actually going to see him at the Silver Symposium in a couple weeks, so you guys will get to meet him too if you come out there. But this is exactly what I've been warning you guys about, and it's exciting to see this stuff. I said about a year and a half ago that we are going to document this next collapse of the economy, and when I say collapse, I actually mean a collapse, not a recession, not a correction, a collapse, because we are losing world's reserve currency status. The US dollar is losing it. I don't care what anybody tells you. I don't care what you see today. It's going to be different in the future, right? So make that very clear. We're going to be able to take advantage of this, right? That's the great news. When you know something's coming, and it is sort of like a slow motion train wreck, in all honesty. People like to equate crashes with all of a sudden, it happened. Well, it's because you had your head in the sand. You had no clue it was happening. But people like myself and others that have been through investing. I was an investor before the dot-com crash. I was an investor in real estate before the real estate crash. And now I am an investor in currencies well before the currency collapse, all right? That's a bad one. It's one thing to have a stock crash and a real estate crash. To have a currency crash, that actually takes down everything. So whatever you're being told that, this time it's different, real estate's not going to go down like it did, or this time it's different, stocks aren't going to go down like they did, they are absolutely they're fools. They're total fools. And the reason why is when your currency crashes, everything goes to crap. I want to be very, very clear about that. Says here, but Target reported that its price cuts did little good. It ended the quarter with 1.5% more inventory than it had 3 months earlier and 36% more than it had a year ago. Man, that's crazy. The company said it reduced the amount of discretionary items it held in its warehouse, but Target noted the sales on those items put significant pressure on our near-term profitability. Shares of Target fell 2% in pre-market trading on the report. Now think about that. You want to talk about a manipulated stock market? You lose 90% of your profit and the shares are trading down 2% in pre-market. And pre-market, just so you know, is much more volatile usually than regular market hours. But hey, that's just, that's where we are. And if you think for a second, that's like a good thing, like, well, that means that the stocks aren't going to crash. Maybe the plunge protection team's going to dive in. I'm going to tell you what. The plunge protection team only works until it doesn't. And not only that, there's a point at which even the government goes back and goes, Yeah, maybe we should let this bad boy come down because, I don't know if you know anything about Nancy Pelosi. We'll take advantage by these stocks. I'm just telling you, this is literally how it works. And the thing is, it's always the retail investor that's holding the bag. With that being said, if you guys want to trade stocks, do it right. I've got the link on how to make money through swing trading. It's an affiliate link from Jay Bravo. He did that to help support the channel. Check that out, but be very cautious. Things are frothy. And I'm telling you, when earnings start coming out like this, it's going to be bad. It says here, plunging earnings once again. Target's quarterly net income fell 183 million, down significantly from $1.8 billion during the same period a year ago. Remember, a year ago, people had a lot of stimulus checks. They're still out spending money. Savings rate was still pretty high, actually, in comparison to recent history because of all that stimulus money. Plus, it adjusted earnings of 39 cents a share. Its adjusted earnings of 39 cents a share were far below the 72 cents forecasted by analysts surveyed by Red Initiative. Sales of 26 billion were up slightly from a year ago and roughly in line with forecasts. So what does this tell you? The analysts are always wrong. You know those people that went to college and go, I went to Coolidge and I have a fancy badge and I'm going to tell you that we are in a recession. Nope, we're not in a recession. Wait, what's the definition of a recession? See my point? They don't know their... I got to keep it clean. I don't even know what to say because the phrase in my head, it's no bueno. My point being is this: they don't know what they're saying. It's like asking a real estate agent, well, do you think I should buy? Of course you should buy, because they're thinking they're making a commission, right? It's just like telling a stock trader, what do you think? It's a good time? It's a great time. I'm going to make a commission when I sell you a stock. Guys, wake up, smell the roses. And I'm telling you, and a lot of people, not a lot of people, there's always a few numbnuts out there and sit there and I can't believe you could sit there and smile at this. Of course I can smile at this. I've been getting ready for this for 10 years. A currency collapse doesn't come around, every 40 years or so. Wait a minute, it does. It does come out every 40 years. The only difference is the dollar, this version of the US dollar, seems to have escaped that. You see, fiat currencies, on average last only about 40 years. And the US dollar, even though it looks similar because it was a piece of paper that's green, every about 40 years, it changed. The writing changed, which means assets backing it, assets around it changed in value. And people that knew that this stuff was happening were wealthy, made wealthy because of it, because they positioned themselves. And that's why we talk about gold and silver on this channel. That's why we talk about real estate. And we're getting ready and positioning ourselves in different asset classes to take advantage. So we're heavy on precious metals right now. That's not financial advice. I'm not a financial advisor. I didn't finish Coolidge. Have you guys actually seen me read? I barely even made it out of high school. But good news, my bank account didn't care that I didn't go to high school. My bank account didn't ask me if I had a college degree when I was in my early 20s, crushing it in real estate. And I'm not saying that to brag. Nope, totally am. And I am, because I'm proud of it, right? And you should all be proud of the fact that you're working hard, you're diligent in your savings, in your investing, and you know that you're gonna care about your money more than anybody. All right, on that note, I'm gonna link the story below. I'm fired up. I need some more coffee. The Economic Ninja is out.